Hello everyone, and welcome to the PivotBoss monthly market outlook for October 4th, 2022. This is the monthly market outlook we do every month here. This one will double kind of as a quarterly outlook as well. Every time we hit one of the quarterly boundaries, we try to look a quarter out as well, and we do that mostly every single quarter. What we'll be doing here today is looking at some higher time frame charts today. We're going to be looking at the quarterly charts using quarterly pivots and yearly pivots. We're also going to look at some major market structure for several futures contracts and try to guesstimate how big the next quarter's range is going to be, so the current quarter's range. So that's what we're going to be doing. Again, thank you for joining me here today. Welcome. My name is Frank Ochoa, also known as PivotBoss. I wrote a book called Secrets of a PivotBoss a while back here that continues to see great adoption, great feedback. Still, we have various pivots we use here that we'll be using this time. PivotBoss pivots are my favorite. We also have PivotBoss bands in addition to the ADR suite of tools that we use to help quantify some of the data that we'll be looking at. So without further ado here, let's go ahead and get started with the monthly market outlook for October 2022. I'm going to drag a chart over right now, and we are going to start with the ES. A big time rally over the last couple of days. We've seen a big move here from the lows. This was Sunday night. Monday morning prior to the RTH Open, we had already seen price kind of bottom out down there. That's a new low for the year. The previous year's low is this blue line right here. You'll notice last time price turned right off the previous year's low and rallied straight to the 200-day moving average. Price then sold off heavily. You had this 2-day move that started things. You had Fed Chair Powell speaking this day that dropped things. CPI data this day that furthered it to the downside until we finally reached new lows. And now we're seeing a pretty significant reaction at these lows. A lower low failure, a big 2-bar reversal right now, and already on a Tuesday, it's an outside week. That's last week's low. This is last week's high, and right now we are already at a bullish outside reversal for the week. So a very strong start to the week. Now, one thing we have to keep in mind is the overall trend remains bearish, right? The overall trend looks like this. That, and this lower line, however you want to define it. This was a little bit more shallow of a lower low failure. But one thing we were looking for coming into this week was if we can get a rejection at 3,600, that would give us a high probability reversal back toward 3,900. That'd be about a plus 300 on the move there. 3,900 being the FOMC key level from September 21st. Additionally, if you're going to close a month at the extreme of the month and you see an initial rejection at that low and close, there tends to be a snapback to the previous month's midpoint. That's about 38.84, thereabouts. 38.85. So that level right there could be in play. We also have a level up above here from the breakdown point. This was a midpoint from the key range that could be reached as well, and then the breakdown point of that level. So we have a confluence of targets here from a very short-term perspective, and we've seen this kind of strength here to begin some of the months lately, but it's always been short-lived for the most part. So again, when we're looking at a rally right now, strength within a short-term downtrend, you have the medium-term downtrend and longer-term downtrend. This is a counter-trend move right here. That doesn't mean we can't see a pretty solid move, but again, you just want to be mindful that after this rally runs its course, we may be looking at turning back down and the next turn down, so it could be significant. We could be looking at new lows ahead, heading into the new year, based off of the current price action we're seeing in the higher time frames. So short-term strength, very solid 2-day move here. Short-term strength back to the FOMC key level below. That's 39.02. If you look at something like the YM, you're looking at a bounce back, and we'll jump back and forth a little bit here, but you're looking at a return back to this 30,974 level. 30,974 is the FOMC key level above. The midpoint from last month is here, and then you have, you know, breakdown points from up above. So again, we could be looking at a return back toward those areas above in the very short term, which means look to buy the dips, look to defend breakout points as these things continue higher toward those short-term targets. RTY, the Russell 2000 is almost at that level already. This has a really clean break through the recent highs. That's the previous week's high, and it's already full on extension mode. 1811.80 here is the FOMC key level from September 21st. You also have the July level right above it here. So again, rotating back to this zone. The NQ, the upside short-term target right now, we're looking at about 12K, just above the 12K level here. It's 12.031.5. That level right there, 12.031.5. That's your FOMC from September. And again, lower low failure here, strong rejection, and a bounce back after recently being taken offered. Now, a level like that, after being taken offered the way it has, the retest can also be offered right away, and you can drop right through that level. That's very similar to what the ES did on the May level. So here's May, took it offered, lower low failure, right back to the level, and then eventually dropped back off that level to new lows. So again, the upside targets here are the previous month's midpoint and the FOMC key levels above over the short term. And this is, you know, the counter trend move within the overall bearish structure we've seen so far this year. So that's the short term. Now we want to go up higher now. Let's go even higher, and what we're going to do is go max available, and then we're going to do quarterly charts here. Click OK. Here we go. One thing that we've been looking at here in these higher time frame charts is the similarity to the current price action against what we saw back in late 07, early 08. So if you take this back to that time, right about here, this is your 07 Q3, Q4. You break down right here, you have an inside month with a big tail and a sell signal, and then you have your breakdown month and your major wipeouts and continuation. So, you know, any other time when you look at a quarterly charts, if you have one big wipeout, you usually come roaring back the next quarter. You know, you have one down quarter, you rally the next quarter. In a strong bullish market, that tends to be the case more often than not. But when it's a market that triggers recession, for example, like the 07-08 or like the 2000 dot-com boom, you see some similarities here on how that next year kind of set it up, and then, you know, the big push came later. Is this going to be much the same? Because again, even in those years, you know, if we're looking at this right now, these 4 quarters, 1, 2, 3, 4, that's kind of what we have here, 1, 2, 3, 4. That's basically 1/3 of what eventually became a huge move. Same thing over here. If we're somewhere in here before we break down, 2/3 of the move is still lower. So are we due for a breakdown of a similar magnitude, and how far? Do we drop, say, back to the COVID lows, 2300, something like that in the ES? Again, if we were to finish this quarter on major selling, we could see a continuation into next year and see this profile elongate. Let's keep things just one quarter focused. If we're looking at this quarterly chart again, one thing we did coming into this year based off of our quarterly work was we believed that the Q1 would be down heading into Q1 of this year. And we closed the year on highs, so we were looking for a rejection and a pullback to the mid. But in looking at many of the past examples that we already looked at, when you have a quarter down, you tend to snap back. So it was going to be a gut check here to see, can we snap back? Or is this going to trigger multiple quarters of weakness, unlike anything we've seen since 07, 08, or prior to that, 2000, 01, and on? Because if that's the case, this quarter is going to be very, very important to see how we finish the year. So now with that narrative out of the way here, just looking at the current quarterly bars here, again, you had this support here, and then price breaks through the midpoint of the previous and goes almost full on stop run quarter down. The next quarter, which was last quarter, remember we had an early rejection of the close right away, and then they rallied to the mid. That was our early idea to begin the quarter, and then some. And then just like that, they found strong highs and turned all the way down to go to new lows and finish the quarter on lows. This thing rallied from this quarterly finish all the way up and then closed all the way down. That is tremendously bearish the way it did it, and you can see all the charts. They all look very similar. Now you have a midpoint. Last month was a sell signal. Multiple sell signals. We also had one here to begin the year. What makes this one intriguing is the fact that it's a long tail, and it's within range of the prior sell-off and still finish lower. That's very bearish. So now you look to the midpoint of that range, which is right there. That midpoint is very important because the midpoint is where a retest could be seen. And if bulls cannot find acceptance through that midpoint, this then becomes the optimum level to sell for a primary trend move down. So right now we are rallying. The short term takes us back to the FOMC key level from September. Maybe we go a little higher into that midpoint, but if we can't fight our way and close our way through that midpoint sooner than later, then it could be a continuation down. That midpoint for the ES right there is 39.61. Just call it 39.60. Now, how far do we think the market will move? How much range do we think this quarter will get? Luckily, we have our advanced ADR indicator down here looking at a 1 quarter basis here, so quantifying the quarter against the averages. And according to the final averages last quarter, this market had been averaging 577 points on a 10-quarter basis and averaging 650 points on a 5-quarter basis. So basically, we're looking at the ES finding a range this quarter of somewhere between 600 and 700 points. 600 and 700 points this quarter. That's the averages. Like the 10-period average here is the gray, 5-period average is the yellow. So quarterly price range is increasing of late, and it has. And so 650 points should be easy. If you look at the first 3 quarters of the year, this one right here is 706 points. This one over here is 950 points. And this one is 730 points. So every single quarter this year has been at least 700. So again, looking between 600 and 700 points of range for the ES this quarter. If we go, just say we get those 700 points of range, but what if price rallies up to this level, and let's just make it easy. Let's just say it's 39.50 ends up being the high, and it finds a strong top. Now we can subtract 700 points from 39.50, and we're going to get a target of 32.50. 32.50 puts us about right here in this zone. That's what the quarterly range could look like this quarter. At the very least. That's just bringing it to about where we've been. Not a catastrophic quarter. Not something significant like this. Just an average quarter based on current volatility. 600 to 700 points. 700 points if you want to go far end or more. The goal in this case is to find the directional conviction. What's the path of least resistance? And again, in a downtrending market, you tend to start the period early with strength, and then you see selling that comes. Then you start the period with strength and selling that comes. That's a downtrend. Right now we're starting the quarter, at least the first 2 days of this quarter, with extreme strength. This could be getting people long, and we could come right into this zone up above, hit those targets, and then start to find some toppiness. And once it does, it could lead to an optimum selling opportunity that leads us to new lows toward our target. Again, about 700 points for the ES. 700 points. So ideally, you participate in the move higher. Again, we have good short-term targets up there that can be reached anywhere in the next 1 to 5 days easily. And then watch for signs of rejection. You don't even have to predict the rejection. You can just allow it to play out. And if a rejection develops in this zone and you start to see this thing start to show rejection and a turn away from that price, we could be looking down again 700 points to the downside. Keep in mind, last month it went well through the midpoint, but found rejection at the FOMC from March, and then failed to hold the midpoint on a retest from above, and that's what opened the door to more weakness. So if we are to push through, say this rally right now goes even stronger and we hit 40.50, and then it tries to hold but fails, that counts too. So those are a couple of tactical ideas to look for here as the price approaches these higher levels. But based off of the trend, based off of what we've seen, when a market's down multiple quarters here, this is looking very similar. Look at those 4 bars, and then look at these 4 bars. And then what happened to begin the next quarter? Price rallied just a little bit, didn't even get to the mid, and then sold off like this. So again, this is the portion here where we go up. We'll see if we find rejection. If we do, we end something like this. That's the quarterly range for the ES, 600 to 700 points. Let's take a look at the NQ. The NQ has very similar look and feel. Again, here's your midpoint from Q1. This thing ate through it and pushed through these lows. Here's your midpoint from Q2. This thing pushed up, went through it. It was a deep rally, and then ultimately closed lower on lows. Look at that sell signal, very beautiful right there. The midpoint is right here. It's 12,380. That FOMC key level from July is about 4 something here, and then this is 380. So 400 could be a good target. What if this thing bounces back not only to the September, but it goes a little higher to the 400? Somewhere in here, somewhere after this bounce, we may see some headwinds come into play. We might see a strong rejection of sorts, and then from there you point downward. For the NQ, we're looking at 2,500 to 2,800 points of range. 2,500 to 2,800. Last quarter, it finished with an average of 2480 and a high end on a average 5-quarter range of 2826. So we're looking at 2,500 to 2,800 points of range. So again, what if this thing comes up here and we hit 12.4? What if 12.4 is the top and we subtract a low end of 2,500 points? That gets you to 9,900. 9,900. That's just 2,500 points. Are we going for 10K this year? Why not? It can do it. If you look right here, this is the previous year's low. This level right there is 99.27, and that's your S50. That's your S50 on the yearly PivotBoss pivots. So 9,900 would be your target on a 2,500 point basis. If this thing goes 2,800 points and tags that red dot, then we go a little bit lower. We're at about 9,300 points, which is here, and that's close to our our key range target from this key range up here. It had an impulsive move. Basically 9,100, 9,200 is that target. So it's basically in line with that. So how far do we go to the upside? Can we find a strong top? Again, you don't have to be a hero and guess where that top will be, or how it'll look, or guess in advance. We're guesstimating about where it'll go, and then once it gets into that zone, watching for signs of rejection, and then looking to see if there's an opportunity to enter in the direction of the current move. And keep in mind, if we do break down this month, or this quarter rather, you have 2 quarters here where it was basically inside quarter for a long time. You're going to be breaking 2 quarter lows. It opens up some downside, right? It's going to open some energy to the downside if that case plays out, and that could kind of spill over into the next year as well a little bit. So this is something we'll be watching here for the NQ. 2,500 to 2,800 points for RTY. RTY here, less data to work with, because this version of RTY came on, it looks like in the 17 here. Before that it was something else. You can see already this one broke down. You know, here's your break initially. It came back, retested the edge, dropped. This is an inside quarter with a high inside range pullback way beyond the mid, and then failed all the way back down. So a big tail here. And again, we're on the pullback phase. How high do we go? Is it 921 retest? Is it 727 retest? Do we go for the midpoint? The midpoint right now is 1840. Great level. 1840. And we're looking for about 350 to 400 points of range. 350 to 400 points of range. If you look right here, that's 400 points right there, and basically each of the last 3 quarters has gotten it. 350's been pretty easy. This past quarter was 385. This was 467. This was 405, and this one was 358. So each of the last 4 quarters has gotten between 350 and 400. If we do get 400, again, from that 1840 midpoint, if it's a perfect midpoint and drop, it's not likely going to be, but if it is 1840, we can look down, and 1440 would be the target. 1440 would be that target, and you're looking at somewhere about right here-ish on the way down. It could be significant. So 400 points there. Oh, that's a little low. I think it's about right there. From here to here, that's about 400 points. So 350 to 400 points, depending on where that target high is right there. And lastly, for the YM, the forecasted quarterly range for this one will be about 4,000 points. 4,500 on the high end. So 4,000 points. The midpoint for this past quarter here, 31.5. 31.5 is right there. And again, if we're looking at 4,000 points and price rallies to 31.5 minus 4,000, that puts you to 27.5. And then give or take 500 points, you have even beyond that. So another 500. So that's what it could look like. 4,000 seems to be pretty easy, again, in the current volatility environment. This past quarter was at 5,400. The quarter before that was 4,800, and the quarter before that was 4,500. So 4,000 seems pretty easy to get to. The upper end of that range would be 4,500. And again, that's a good sweet spot. So this current pullback we start to run into some issues, we hit 31.5 for example, you could be looking at 27.5 down below, or as low as 27K on that 45 range. So that's the quarterly range for YM. Now, if we go into the daily charts real quickly here, just to cap this off, the key range that I'm using, a key range is this one. Wrong button there. This one right here, down to this current low. That's the current key range I'm using. And for those of you not familiar with a key range here, this is an impulsive move that happens in a market from a strong pivot, high or low. You know, in this case, there's a couple of key ranges. I mean, this is a strong pivot low, strong pivot high, and it gets back to the mid. That's a strong pivot high, strong pivot low, and it gets back to the midpoint of that bounce quickly. When it does that, it establishes what I call a key range. And from that key range that you now have actionable levels to watch for trade opportunities. The basic trade is to fade the edge. So if this is the edge, you wait for price to push above the edge, and then you look for a failure to hold that edge. And then when that happens, you return to the midpoint. If you can return to the midpoint, odds increase that you can return to the low. And then over here, look what's happening now. A rejection at this edge, a recovery of the pivot low here, and now ideally you work back to that midpoint. So 31.537 is that midpoint, and what's the midpoint for the previous quarter? 31.5. So right now you have some corresponding levels with uncorrelated factors here. Additionally, with this key range, whenever you do see expansion, you want to see a move to the 50 and 100% expansion levels. But whenever you're fading, the best fade is usually this 25 level right there. If you put an ambush entry somewhere, and I know I'm not the biggest fan of ambushes, but the 25% level above and below a range, a good key range, is usually the best spot for an ambush. Look how clean that reversal is off that level. If you notice over here, this is another one right there. That's just, sometimes these levels are just very, very clean. And it's the first time you hit it can be the best there. But that's a great response off of that level. Now, if we were to get a continuation to the downside, say we ultimately break to the downside, it's this target and this target you're shooting for, based off of this impulsive move. And right now, it was a failure at the top, rejection, rejection, failure. Yeah, we're bouncing right now, and that could bring us up to the midpoint here, but do we then turn down and start to make a move through the bottom? We'll have these extensions here to work toward down the way. That's about 27.7 here and around 25.7 down here, 25.8. So those are that's the key range here that we're watching. For the ES, you see a similar key range right here and similar responses. Here's your key range high, here's your key range low. Look at the failure, look at the rejection here, and it goes right back to the mid, another rejection, back to the mid. Here's rejecting, and it's on its way up. So again, a good uncorrelated target up above of 39.20. This FOMC is 39.02. You got the midpoint here. You got some levels that we can be shooting for. And once that happens, again, are we turning back down? How's it going to play out? So watching for signs that we might see some sort of strong rejection after this move higher. If we get that strong rejection, then we could be forecasting lower quite a bit of points. Remember, for the ES, we're looking at up to 700 points, the NQ up to 2,800 points, the RTY up to 400 points, and the YM up to 4,500 points. So I did want to discuss that. Quarterly charts as we head into the new quarter here, along with the forecasted range amounts for the current quarter. Now I did want to talk a little bit about DXY. Actually, let me click the dollar DXY. The dollar's been really great this year in terms of its trending price action. It's been very reliable to the upside, and it has been almost perfectly anti-correlated to the market. It has been trending up for quite a while. I really caught on to its real good strength somewhere around in here. I mean, it obviously had been going up, one of the things that was firing a lot of these, but we were coming into a level that hadn't been pushed through in a very long time. 104, a big time level right there. And knowing that if you push through 104s, you open up an entire market structure above that just hadn't been traded in like 20 years. So this is tremendous in how it pushed through and has continued to remain bullish. We've had some really good counter trend moves here recently, and each of these rallies coincided with market weakness. These counter trend phases here and currently now, those counter trend corresponded with strength in the market. So this is one that has been very useful in timing when perhaps we might find a rotation here in the broader market. On this day right here, we mentioned in our trading room that we might be close to a cycle high in this one that could bring us back down, and if so, the market may rally a bit. But on this return, how's it going to behave? Are we going to catch another new swing move up, or is this pretty much it for the current move? You know, this is the strongest rejection we've had so far. A lot of these were more pullbacks and holding and building energy. This has been a full-on turnaround, which is pretty sharp. So maybe we've put in a high, and that could be tremendous. It would give directional conviction, back to 107s, and then below that 104s in here. So those are some big levels down below. At the moment, I'm still thinking along the lines of finding support here sooner than later and then working our way back up. It just may not be a sharp turnaround like we just saw. So watching this, but again, this has been tremendous here in its strength, and the counter trend moves have synced up really well with how the market has moved as well. Here's gold. Now I did want to talk a little bit about gold because this recent strength is also almost in complete stark contrast to the dollar. The dollar right now recently dropping, and the preceding rally that followed it. Right now you see a big drop and a corresponding push higher. So you're seeing a little bit of that correlation going on right now. The big thing about this one is that it has been relentless lately in its downward trend. It has been relentless, and it even broke through a 3-year support level, which is 1680. 1680 is a 3-year support level that has held no matter the circumstance, and it just couldn't do it. A couple of weeks ago, we saw the big failure here, and then just recently, we saw price bounce back for a retest of the FOMC key level, of the previous year's low, and of the 1680 level. A bunch of things. It came back for a retest, and yesterday it blows through to begin the quarter to the upside and just smokes this level back higher. And that is a massive, massive recovery of that market structure. It's a big time exclamation point, and the way it looks on a chart right now is very, very strong. It's going to be interesting to see what happens when we come up toward the top of this regression line. There's been a very clear downward channel that has developed here. Again, the midline has been a very forceful level, and right now you see how that midline went bid again. So looking to see how far we can go. If it's just more of the same, then we top out around 1760, 1765, and then start to work our way back down. That was the case here. It was the case after that day. Certainly the case here, and price wanted nothing to do above 2,000 back there, and it's been a massive wave lower ever since. Now here's where I think there is some positivity here, is that that 3-year support level gave way in tremendous fashion, but we saw a strong lower low rejection and a forceful return back above that level. And the next pullback could begin to seal it as a higher low zone, and we could return as high as break even on the year. This could be enough to get this thing to rally back to break even on the year. We were just there recently. We sold off away from it. We consolidated around it. Here we consolidated around it. We rallied away from it, came back to it. I think this previous year's close is going to be a magnet here in Q4, and this forceful return back above 1680 gives this thing a shot to really move and work our way higher. So the next pullback, maybe it forms an impulse range and we get the midpoint and it can hold and go. But 1680 right now, if bulls can keep that bid, there's a shot to break this channel a bit and return back to break even, back to the yearly value, which are one and the same. And then you also have the 200-day moving average up there as well. Quite a bit around the 1830 level, and that could be ahead. So some thoughts on gold here as it breaks back above the 1680 market structure with a shot to return back to 1830. Okay, I wanted to talk some Bitcoin. You know, Bitcoin has been barely hanging on to the 18K level. This is a level we go back with for a long while here, but these are some good levels here on the chart, some good pivots. Again, 30,000, 29, something like this. And then we have about 12K, 12 and a half right here. You see, you had all this market structure up to that point, and then right there you get a breakout through 12.5, and you rally to about 30K. And then all of this price right here was quickly auctioned through. Some prices didn't even test it, like right here, never even tested it on the futures, just rallied through it. And it left behind that thin market structure back here. That's been like this ever since. And so the thought process for a long time has been at some point the market will go back and correct and fill that part of the profile. Initially last year, I thought it could be here. It looked like all signs were pointing to we were about to drop, and miraculously headline risk came in, additional headline risk, and this thing rallies to A69 first. Come back to the level, and right here, this is where we mentioned before, we had that tremendous wick down to 25K and back up, and then 20 days sideways, holding above the midpoint of that wick. That's about the moment where I said this thing's about to see a break to the downside. And if it breaks 28, we could be looking at a 10K drop or more back to 18, or even as low as 15 as this thing works through this zone. So this is kind of a progression of what we've discussed with regards to this portion of the profile. And we've made a really good push through that profile, and we've done quite a bit of repair over time. But you notice here, there's still, it's like a, this is your D shape that's still developing. And there's still a huge LVN channel from here to here that goes down to 12K. And then you have the channel portion that goes way up here to 28K. And those two are still very thin. So we have to go trade those at some point and fill it in as well. Now, the way it looks right now, it's stuck on 18K. And look at this right here, this rounded behavior. That is not typically very good, especially when it develops at a low. When it develops after a sell-off, and then you get that rounded behavior like this with a flat bottom, that tends to suggest a break is coming. You know, as a microcosm to that, it was probably, you know, right here after this drop, you had that rounded behavior, and it all sat right there and went boom. This is a bigger version of that with much more potential energy. Are we going for 9,300? Or do we just barely work through the profile and bounce quickly? So this one still doesn't seem like it's ready to go and rally, but it has held on to support really well in the zone. When you look at publicly traded companies that own Bitcoin now, the list has dramatically shifted and changed. I can bring up a link here just to show for visual purposes, but there we go. So these are the top holders of Bitcoin for publicly traded companies, and look how much, about 130K for MicroStrategy, Marathon 10K, Coinbase 9K, Square 8,000, Hut 7, Hive 3, Nexon, that's from Japan, 1,700, Voyager from Canada, and that's pretty much it. It thins out. It thins out pretty fast after that, and you'll see, you know, nothing much from there. Whereas before, quite a bit more stocks that you'll find, again, holding it, like Tesla, for example. Tesla is notably not on this list right now, but they were probably number 2 position with a ton, but they were tethered to the stock price, and their stock suffered for it. So in releasing it, it helps this year, this past quarter at least, but noticeably changed here with the way it looks. So again, there's been times in the past where it looked like things were dire, and then something significant happens and this thing rallies. Is that what we're going to see down here? Are we somehow just going to magically rally? If so, it could be a very aggressive, violent move higher. We're at 28K already or something, but it's just, we haven't seen that type of price action all year, and wouldn't anticipate that, especially with the continued Fed rate cycle and other things that have impacted the markets the entire year. So not really seeing that potential just yet, but anything can happen. As of right now, rounded price action, compressed range after a major sell-off in the middle of a major LVN channel with more to repair. It wouldn't surprise me if this thing makes a run at getting cut almost in half and drops further to the downside. Now, can it respond after that and mark a low? Or, you know, does it sit here in another low range as it has all year? Because if it does that, then, man, we have another round coming. It needs to find some sort of capitulation low, and it ain't doing it right now. So the next move, again, has the potential to push this thing 5,000 points or more really quickly, and then see a follow through from there. So right now, not the greatest of thoughts on Bitcoin from a bullish standpoint at least, but 18K here could open up a major opportunity ahead if we do see that type of flush. But until that happens, further development within this range until proven otherwise, which makes it a little boring here at the moment. Okay, let's shift focus right now to some stocks. And again, if you have any stocks you want me to take a look at, please type them into the chat. I am monitoring the chats in the trading room and also the Zoom room as well. And you know, I have a list here, and you know, my list usually change in terms of what we're looking for depending on what the market's given us or where we are. Right now, there's some candidates that we can pull up that are mostly on lows or trying to find some support. These are something that maybe we'll keep on the lookout for a potential buy opportunity ahead, but it's still not ready. There's others that may be accumulating and looking like if you just have a longer term outlook here, there might be some pretty good multiples that come from them down the road. But when again, and also let's get to it. I guess we have several of these types of candidates. So now with that preamble, here's the NVDA. I hope not. I have the chat there. I put a test out. I didn't know. It looks like it's working on my end, but maybe it's not. Oh, NVDA did not go. Let's put it here. There we go. Okay, here's NVIDIA. NVIDIA, first of all, last month we had this one as a sell candidate, and along with this entire group, and mentioned how bad it is. So you can see how it turned out the rest of the month, and it got the lowest low of the low here Thursday, before we've seen a little bit of a pullback here right now. Short term, maybe there's a bounce here. Short term. But we're almost to a major zone in the chart where a long-term buy could be in play. Again, right here, and with the way the market's looking at the moment, it wouldn't surprise me if we do see a little bit of a bounce here ahead. But what I'm looking for is for a test at the 115 level. That 115 level has been significant. It has been a tremendous area for over 2 years. And that, you know, if we are able to see some sort of significant rejection, could take us back up within this D-shaped profile. So you see a 115 move, maybe back to 160. So again, that's weird. I wonder if it did some kind of yeah, there it is. I see the QA. I wonder why it's disabled. I wonder if it's some sort of meeting thing. I don't know where to switch it. So my apologies. Use the Q&A feature if you are using and following this on the chat in Zoom. Okay, so thank you for that, by the way. So right here you'll see again the 115 level, very important. If we go back out to the weekly time frame, here it is. 115, it's the previous year's low. It goes all the way back here. This year has been about taking the previous year's close offered right to the mid, retest through the mid, and it's almost to the low. And so it's you do all this work to not get to that low. I just don't see it. So any strength we see here likely sold, and you go test that low. And I'm not saying 115 has to be the low. It's just go push through it and then recover. That'd be best case. And that would give us a zone that could give a decent buying opportunity ahead. But here's where, again, if this market takes another major turn down, and there's this thing just kind of butter knives through butter here like this, then where's the next level down? It's like 80. So that's a big spread right there where this thing could still fail through. It's been incredible what this whole group has seen in terms of selling pressure. But we are coming into a potential zone of support that we should at least pay attention to. But do keep in mind that just because it's here doesn't mean it has to stop there. It could easily make this move through the thin LVN portion of this channel down to 80. So that's something to keep in mind. So that's one right there. Again, this is one that, now that it's sold off so much, here we are into Q4, can we scoop up something cheap at a cheap level here and get a decent return out of it in a short period of time? Because if you can reject down here, you go up within the prior D-shaped profile back up toward, this zone here. Percentage-wise, that's a pretty solid gain, and that's just a short term. What if it can stay above there, and now we're talking about recovering back to value, and that's 195, and now from a 115 move, that's a really solid recovery. So first things first, though. Okay, the next one here is Pinterest, and we've been looking at Pinterest a little bit here recently in our room. What I like about it is the rounded bottom that's developed and the compression that it's had over multiple months. While the broader market and a lot of different things are getting crushed, this one has been able to tread water. It has been able to reestablish higher market structure. So you'll see right here, here's your market structure right there, and then you got some below it here. Now, we first mentioned this one a couple of months ago when this thing had this rounded bottom and a recovery here. We mentioned that we could see a little bit of a rally back to the upside, but a great rounded bottom here with multiple months. This is like 7 months sideways. If you look at it in a weekly time frame, obviously this is one that has gotten crushed, $90, and this has all the classic market cycles from the markup, the distribution, the markdown, and we're seeing a great accumulation phase here. See VPOC here at 1911, so it's trading above value here for the last many weeks, last couple of months. Great compression of the range, and again, we never know when we're going to see that breakout and markup phase. It could be soon, or it could be next quarter. We could literally go sideways and continue to build out in this quarter, or pull back if the market gets weaker. But that's what, this is an accumulation phase here, where a great compression phase has developed. And if it can break through those highs, if it gets through that zone, you start to mark your way back up to the next level up, $40. Maybe you get beyond that and it's at 50. 50 would be a good high-end target here. And right now, it's trading 24.90, so that's a double if you have a long enough time horizon. Again, that's the tough part with these accumulation patterns, is that you don't know when they'll see that move and that breakout. Sometimes, though, if you follow them long enough, you'll see the breakout, but you may want to build a position ahead of that just in case as well. So some things to consider there. The upside break point would be at around 26, 27 bucks, and that could open up a move to 40 right out of the gate. But as we head into next year, you have the current year. We'll have a previous year's high here unless we beat that this quarter. That's the level to go gun for early next year, or at some point next year when we make a move. So just some thoughts right here, but a good accumulation phase developing in Pinterest. Uber is one to watch here. Here's Uber. Let's go down to the daily chart here. What you'll see right now, you saw it a little bit there. You had a rounded bottom, kind of a head and shoulder pattern here as well. This nice little rounded bottom, and then you've seen this market structure here, big time push to the upside above, and then it's come back and held on the retest at this counter edge, which is tremendous because when that happens, you tend to go to the opposite side again. So right now, Uber, from a short-term perspective, and its ability to hold 26 here, suggests that there could be a move toward about 34 and maybe as high as 35. Again, this is an idea for the next couple of few weeks here, but not really beyond that, because this is value, VPOC here, and we could be chopping back and forth for a while in here before it tries to build up some energy. But from a short-term perspective, if the market's rallying right now and we have some more confirmed upside that's likely ahead back toward those FOMC key levels above, then you're going to have some market participants that are rallying alongside it. Right now, the way that we gapped up and ran and continued higher, the way we have here is bullish. The way it recovered back above this 28 level is strong. You know, buying the first pullback here and watching this thing return back toward about 32.5 and then maybe a little bit higher could be very, very solid here this month. So this looks like a solid opportunity from a short-term perspective up ahead, especially if it can continue to hold above 28. Another one here to take a look at is STNE. And again, some of these are accumulation patterns. You know, we've been down at these levels now. This is 9 months under our belt, entering the 10th month of the year. It's been a very, very overly bearish year compared to what we've been used to for a long while. But this one is one that found its low early in May and has been off those lows ever since. It's found a way to trade above value multiple times this year. We've got ourselves a great rounded bottom developing with some compression of the price range, and value is down below, and it's currently taking it bid. That's a pretty strong short-term move right now. When you back up to the weekly chart, you'll notice that this range here, you know, 15 is the key level, has basically developed below these prior support lows. Nice accumulation happening down here. If this thing can push again and get a breakout transition phase up, we could see this thing start to walk its way up quite a bit. Again, 40 could be around the corner, but I think you go into the bump here and go to about 45. That's this D shape right here. Right now we have this ketosis happening off the right side of this profile here, and if it transitions back above this zone, you start to work your way back within the previous distribution. Again, this is looking way out, right? This isn't something that happens this quarter. We may not even get a breakout this quarter. That's the thing with these accumulation patterns, right? We may not even get a breakout, but at some point here, if this thing get above 15s, that's the moment here where you start to mark your way up, and maybe by this time next year it's reached 45. And from current levels, I mean, that's quite a multiple. So again, those are the types of accumulation patterns that can tend to work out down the road when they have a great foundation for building that energy down here, shifting value, and then once it can get a transition phase, it tends to be fairly easy to mark up, as a lot of the supply has been bought up down here. So again, we'll see if that can play out here for Stone Co. Another one here to watch is Square. Square is sitting, it's kind of filled in some of the zone here. I think the next CLVN is right here, 50.5. Or maybe we can just make it 50 even, but right there, that's the next CLVN below. We did some of this analysis in the prior quarters where, again, we mentioned, you know, here we're in this current distribution right here, but if we fail here, you'll work your way down to the next LVN below. And, you know, you fail here and boom, you know, and you've been inside this zone. If you fail here, you work your way down to the next LVN zone below and maybe trade in here some. So again, we're kind of running out of some of this downside runway, but maybe we're not. The next major target or next major LVN will be that $30 level. So to duplicate this right here, that's 30 bucks right there. That's your next CLVN below. You'll notice the COVID low right here. Prior to that, it rallied there. That's a good zone, and then you have this distribution right here, and that's where we're at right now. We're inside this distribution, so that's the zone. Are we going to do like this, where we dip the toe down here, and then when we're able to recover here, we rally back to the top, and maybe back to the top? You know, that's the long-term idea, would be being able to climb back above 100 at some point, perhaps, for this one. Unfortunately, as I bring this over, Square is number 4 on this list with 8,000 Bitcoin. Whenever Bitcoin has a big day, Square has a big day. But how many days has Bitcoin had to the upside that have been positive this year? Not many. And so Bitcoin is at or near the lows of the year, and so is Square. So if at some point Bitcoin can find a low, you will see some of these Bitcoin tethered stocks rally in tremendous fashion. So the next level down, 50.5. From a big perspective, maybe 30. Now, if we take this short term, today it was up nearly 12%, and it popped back above the $60 level. So here's $60 right there. You can see this tiny little range right here. Let's quantify this range. 1, 2, 3, 4, 5, 6, 7, 8 days. If we look down here, make this 8 days and apply it, we now have a range as of yesterday that was compressed, and it was looking for, we're looking for about 99 points of range here. Let me see. Nope. $15 points of range, almost 16. Sorry, I was reading the wrong number. Right there. 15.9 would be the high end. And again, you know, it's not too absurd to think that this thing can go 16 points because on an 8-day basis, because it did it recently on this drop right here, it did it on this drop right here, it did it on this rally right here, it did it on this rally. So it's done it multiple times very easily recently. So what I like about this one is maybe the next 15 points are up, and once that happens, maybe it starts back down again. Who knows? But from this low at 54, and you look at 16 points up, that gives you 70 as a target. That's just in a very short term. You have this narrow range, and you got the breakout. That range also coincides with kind of the bottom here, so this breakout's very solid. You know, you get a pullback to 60, 60, and you make a move to 70. That's a plus 10. Plus 10 just to get to that zone. And that's a very short-term oriented move. And then you have the bigger continuation that could be to the upside if this thing gets all the way back to, say, market structure highs. Because right now this thing has really great market structure as well. If I draw this out, you got this low point, you got this point right here, and you got that point right there. This is your tiny box, your box reversal with a return back to the midpoint. That's 75. So that's a very doable upside target, 75 against market structure. Again, the ADR gets us to about 70, but getting this thing to 75 here would be an easy move to market structure, and that's just a short-term oriented move. So again, Square could be looking good here pretty soon. Again, this thing tends to rally when Bitcoin rallies, and notice it was up today nearly 12%, and Bitcoin rallied today too, up pretty nicely. So if Bitcoin catches some strength here, back to say 2,300, that'll flow Square to the upside. All right, let's take a look at the next one here. We got Netflix. Yeah, I'll take a look at that one for you there, pro forma. This is a look at Netflix here. We've had some accumulation in this one. It's been kind of odd, but it's been there. You have this narrow range, and it broke it to the upside. We had it as a long candidate. during that time, and it's been able to hold, but it also went very narrow. It didn't really go much higher, but it didn't lose any either. I mean, how much of the market failed and closed on the lows of the quarter, and this thing closed near the highs of the quarter? That's not bad. That's pretty solid. And actually, let me change to the quarterly charts here, or pivots rather. There it is. Last quarter, it took the close bid and rallied, hit the mid pivot, and just stayed there. Closed on the quarterly high. Now, you have a narrow value, inside value, quarter. You have earnings coming up. Maybe that's a boost. It rallied on the last earnings. It's been getting dumped prior to that. Subscriber count issues and things of that nature. But it's holding above this LVN, generally rounded bottom, flowing higher. Can this thing make a move for 360 over the next couple of quarters? You know, again, it's building some energy down here that could be very, very nice. Now, when you go back out in time frame, here's your weekly time frame. And you look at where this is developing. That 250 level was prior support lows here, here, and here, and had a trading range that took you as high as 420. You know, if you wanted to be modest, just call it 400. So that's where the next X amount of points are coming, is to that 400 level and maybe a little bit overage. But you're going back within this trading range right here, that market structure. And right now we have very narrow, compressed market structure with an upward flow. Again, I don't know when. This market is not supportive right now of a rally. It is in the short term, but not from a longer term basis yet. But this one has defied the broader market and has actually held. So maybe it's beaten to its own drum a little bit. Earnings would certainly help that. But at some point, maybe it's this quarter, we can get a transition day back above, or transition week, or whatever it would take, back above 250. And that would begin the journey from 250 to 400 over the course of the next several quarters. So the fact that we are consolidating in a narrow range below this market structure is setting up for what could be a great squeeze ahead. It just needs to get above 250. So that's one to consider. Again, long-term, long-dated focus here, and not really a clean entry opportunity just yet. I mean, again, you could build a position, or you could wait for the transition to occur and then work from there. But that's one to keep on the watch list. Here, let's take a look at Shopify. This is a short-term oriented play. Again, market structure related. You have these lows right here at 30 bucks, and that's the previous quarter's low. And this is the previous quarter's low this time. And then you have up to the top of the range here, that's 41. And again, look how price traded through the bottom of this market structure, and then what happened today? Big time squeeze back above. Big squeeze back above, tracking these participants from below, and already pushing through the midpoint of the previous month's range at 31. So the recovery point is above 30, or is at 30. We could pull back as deep as 30 and still be a buy for a push to the midpoint of the range and the previous month's high. That's going to be 36 right here. And then from there, if it's lucky, maybe it gets to 41. But I'm telling you, on the long rotations right now, you know, you want to be short-term oriented, 1 to 2 weeks out max. Maybe there's some overages here. From a broader perspective, sure, you know, recovering 30 here may get you all the way back to 40 or 42. But once it gets above 42, 45 here, that's where the real work comes into play. And I'm not sure we're quite there yet. But from a short-term perspective here, a pullback into 30 offers an opportunity to 36, maybe higher here on a very short-term swing-oriented basis. Let's take a look. Here, I'll take this one right now. This is GNRC. All right, general holdings here. One that's been trending down. There's been several candidates like this one lately. Mainly the gaming tech group. That's done real well with similar patterns like this. What I mean by that is right now we are at a low, and we've got a small range that's developed at a cycle low below support. And you know, being that we are on this low in a downward channel, maybe we bounce back a bit here if we can only get above 190. At the moment, this thing showing a little bit of strength against the previous quarter's close. Still trending down though. We are, you know, in a big time LVN in the charts. Let's back this up to a weekly real quick. Still working its way down here through the thin portion of the profile. So it's still generally trending down again and could continue down toward a long-term target of 120, kind of giving back all of this. Still downward channel, still downward channel. We might bounce on a counter trend basis here and then, you know, still continue to work our way down. So I still think this has long-term downward trend potential. But if it can get back above the short-term range here, it opens up some upside back toward 240 maybe, and VWAP around 245. That's a decent short-term swing if it plays out that way. So again, looking at the daily here, this small range below, if it can pop back above 200, it has some room to run back toward value up above. And for a little bit of here's one to kind of, let me see. Here's a reference point. So this is kind of what I mentioned here. Some of the tech gaming stocks here kind of look like that one, where they had a small range at the bottom end of this channel, and then here today you're seeing a big break and a continuation to the upside. You're also seeing that IGT, is that one? Yeah, IGT, very similar downward channel. Look at this right here. There's your range, and then here's your small range here. And if you can only get above, right, if GNRC can only get above that one level, like this one did, it opens up, you know, the rest of this range up here, back to the middle of the range, maybe back to the top end of the range as well. So IGT's one. I think BYD had a similar pattern, if I'm not mistaken. So right here, similar pattern, at a low, narrow range, breaking higher today, and has a shot to make a move back within the range. So those are similar patterns that you can kind of use as a template. Let's take a look at Meta. I have a few more stocks here on the list. Again, different types. Meta has been crushed. Downward sloping, very ugly. It's been bad. You hear some of the stats on how much Zuckerberg has lost this year in terms of his net worth based on this drop, and it's just, you know, again, it's quite a bit. This has been about as bad as it gets for any one stock here that's one of the big ones, right? But we are coming into a spot that could offer a little ray of hope, and that spot is the 120 level. 120 right here, big time level. And right now it's at 140, so it'd be quite a continuation to get to that point. We do have earnings coming up, which could provide a catalyst to push this thing further lower. But 120, I think, should be a level to respect here. Number one, you have this big long form D-shaped profile, and this would be the bottom end of it, and a snapback to value on that profile would get you back to 180, and that's not a bad spot. And if it went to the other side, then you're back to 220, and that would be a win, long-term win. You know, 120 to 220 would be really significant if it can happen all the way across. Right now, 120 to 180 would be tremendous. We haven't seen any kind of strength at all, though. This we knew was coming at a point where selling was likely coming later. It was that point where all the market rallied right ahead before it dropped. So if you take that out, man, this thing is very few and far between with rallies since it topped out last September. So, you know, this is not something where you anticipate the entry. You want to see some sort of reaction. You want to see it react. You want to see it try to put in a bottom around 120 here. And if so, then look to establish an entry back up some degree as it snaps back perhaps. But 120 is going to be a level to watch up ahead. I know, again, this is still one to keep in the oven. But when you look at the long-term chart here, the market structure has been pretty good. You know, it gave up to 220. It's been working downward ever since. 120 is the next level down. And ideally it can stop there and maybe work its way and stay in here a little bit in the best case scenario. If not, now you're looking at about 80 as the next level down from there. And again, we'll see what happens at the first level first. But this is one to keep an eye on to see, can it bounce? If we can get a good bounce off 120, maybe the bleeding has stopped. And now we get some sort of impulsive move back towards, say, 180. And that would be a huge win. 60 handles on a responsive move. Another one to take a look at is Spotify. Spotify is at the lowest levels it's been. It's sitting at significant support zone and even lower. It's still building a range down here. And this is about as low as it's gotten. Value is way above 144s. If you look at the daily chart, there's something to like about the short-term chart. And again, a lot of similar charts we're looking at right now, where we've broken down through the bottom of support. And then today, over the last 2 days, we've seen a solid bounce. You know, can these bounces continue? Well, we have $90 to look for. Can it hold 90? 90 is a big time CLVN on the chart. Again, this is the lowest prices it's been at. So if it can hold 90 on an early pullback, there could be a bounce phase back up to the midpoint of the quarter, and that's about 105. 105, maybe 106. It's 106. So 90 to 106, that's a pretty good move. That's what's that, 16 points of upside that could be there. There could be an out-of-the-money spread that could be in play, something like that. But a short-term rotation back up could be in play here if we can see Spotify hold that 90 level. Another one here that looks similar here is Snow. Looks like it did not. Let's try that again. Snow. This is one that has rallied lately, and you'll notice there's an uptrend here. There's a full-on uptrend happening in Snowflake that has been under the radar. If you look at the 163 level, a significant CLVN, it has been a huge line in the sand for this chart here. And over the last 2 days, we've seen a failed new low and an upside break, and we're now pushing through value, modified Pima crossover buy signal in full display, and we have a shot to release some energy to the upside, likely to the previous quarter's high, the previous month's high, and into the CLVN here. That's about 206. Right now we're trading 183.81, and again, the next morning pullback could be enough for this one to get going to the upside, and you have a plus 20 to 25 points of upside up ahead. So this one is a short-term candidate, again, showing some juice off the CLVN here, rejecting a downside break from this narrow range and instead breaking it to the upside with some highs that could be in play up ahead. From a longer term perspective, this one is developing a very nice rounded bottom. You know, a pattern that could eventually lead to some upside push and continuation, but right now, again, this is a very short-term oriented candidate. Last one here to take a look at is WIN. We mentioned some gaming tech stocks. This one right here is an actual casino and resort, but they've had some good days today, this space. This one has a significant rounded bottom here. $70 has been a heck of a resistance level, and we've now seen this thing push through those highs and have a huge high range day of 9.5%, and is now testing the edge of a rounded bottom here. That rim can open up an easy 15 handles to the upside back to value. Easy. So if this thing can get a push through 70 here, you open up to 85 at the very least. And then it could easily come right back, you know, and we trade in here a little bit, but we'd be going back within this range up to these highs. Again, in a market where you're seeing strength but a predominant downtrend, got to be careful, because if this thing failed new highs tomorrow and we close below 68, it could just be a big trap. So again, proceed with caution on this one, but the way it looks right now, great energy built up, big day, right at that resistance, right at VWAP, right at the quarterly high, right at the 200-day moving average. There's a lot of confluence of levels here. If it takes one bid, it takes them all bid, and it opens it up. If it rejects one, it rejects them all, and we're snapping back to 60 very quickly. So this is a big-time edge, and we'll continue to watch that one. All right, everyone. Well, I'm going to go ahead and call it a monthly outlook for today. Thank you very much for joining me here today. We hit a lot of different charts here. If you take anything away from today's session here, it's the projected quarterly ranges that we could see this quarter for the ES, the NQ, RTY, and YM. Those could be high-quality targets here if we can find ourselves a strong pivot high soon. All right, everyone, have a fantastic rest of your day. Thank you for joining me, and I'll see you in the trading room. Take care.